Welcome to our channel. Today, we're diving into one of the hottest topics in the financial world, inflation and the Federal Reserve's next big moves. Whether you're an economics whiz or just curious about how these numbers affect your daily life, we've got you covered. So stick around, because by the end of this video, you'll not only understand what's going on, but also why it matters to you. And hey, don't forget to hit that subscribe button and turn on notifications so you don't miss any of our breakdowns of big economic news. Let's get started. The Federal Reserve's preferred inflation gauge is back in the spotlight as the Personal Consumption Expenditures (PCE) price index rose 2.3% annually in October, exactly as economists predicted. But here's the twist. Even with this uptick in inflation, traders are doubling down on their expectations that the Fed will approve another interest rate cut this December. This data, reported by the Commerce Department, provides key insights into inflation trends. On a monthly basis, the PCE rose 0.2%, while core inflation, which excludes food and energy, rose even more sharply at 0.3%. The core annual rate reached 2.8%, slightly higher than September's 2.7%. What's driving this? Services prices surged by 0.4%, offsetting a slight dip in goods prices. Energy costs ticked down by 0.1%, and food prices remained relatively stable. Housing-related costs continue to be a thorn in the side of consumers, rising by 0.4% in October, even as rents were expected to cool. So what's the big picture? The Fed aims to keep inflation at a steady 2% annually. While inflation has cooled significantly from its 7.2% peak in June 2022, it's still above target and causing financial strain, particularly for lower-income households. This persistent pressure has become a key issue in the ongoing presidential race. Interestingly, despite inflation challenges, consumer spending remains resilient, albeit slightly softer than in September. Spending rose 0.4% in October, while personal incomes outpaced expectations with a robust 0.6% increase. However, the personal saving rate dipped to 4.4%, signaling that consumers are dipping deeper into their pockets to maintain their lifestyles. On Wall Street, the reaction to this news was mixed. The Dow Jones Industrial Average gained around 100 points, while the S&P 500 and Nasdaq Composite slipped into negative territory. Treasury yields, meanwhile, fell, another indication of shifting market sentiment. So why does this matter to you? The Fed uses this PCE data as a key tool for deciding interest rate policies, balancing inflation control with economic growth. While inflation is inching closer to the Fed's 2% target, policymakers remain cautious. Their strategy of gradual rate reductions reflects ongoing uncertainty about just how much more adjustment is needed. To sum it up, inflation is cooling but remains a stubborn force in the economy, impacting everything from housing costs to your grocery bill. And as the Fed gears up for its December meeting, all eyes are on whether another rate cut will give consumers and businesses a little more breathing room. If you want to stay in the know about how these changes could affect your wallet, don't miss our upcoming videos where we'll unpack the latest economic trends in plain English. Like, comment, and subscribe to join the conversation and keep learning how the world of finance shapes your everyday life. Thanks for watching, and we'll see you in the next video.